This Saturday, we have 3 interesting webinars for you. Morning 10 a.m., we have Mid and Small Cap Mutual Funds Navigating Underperformance and Value Traps by Akash. At 10 a.m., we also have another webinar, Precious Metals Time to Shine or Lacking Lustre by Samyuktha. At 11 a.m., we have Insurance Impact of GST in Health and Term Insurance, Right Time to Take Insurance by Abhirami. What are you waiting for? Register now.
Not many people would remember this, but if you look back at times when FIIs wanted to take out money significantly from India and came to sell, the markets would fall rapidly, very aggressively and very quickly. When that happened, the FIIs would hardly be able to sell enough. And if they wanted to sell more, they had to take the market even lower. Essentially, whenever FIIs wanted to sell, the impact cost was always high. Now, cut to the present. We have a situation where FIIs are selling comfortably and they have taken over 2 trillion in Indian rupees out of India. Comfortably. All they are selling gets absorbed. And what does this mean? It means that the domestic investment flows have given so much comfort to FIIs that they are actually able to sell with very low impact cost and take money out. Ask yourself a question. In the present, in how many emerging markets can FIIs actually achieve this? There lies the answer to why FIIs are very comfortable selling in India now. They may not be able to sell in other countries. India is a country where they're able to sell as much as they want to. They're able to sell without disturbing valuations. The market is actually inflicting the lowest impact cost on FIIs who want to sell in our history. It's a historic low. What else would they do? So the inability to create liquidity in other markets and the ease with which liquidity can be created in India are both combining into what you see as FII selling. Many people tell us that this market is expensive and that is why FIIs are selling. Historically, FIIs are bought in expensive markets, bought very aggressively in the most expensive markets, and sold mostly in markets which were actually attractively valued, good to buy. It was only in those markets that FIIs sold. This is probably one of the rare instances where the FIIs are selling in a market which they are projecting as an expensive market. This market is definitely not a cheap market. I mean, nobody is going to say that. But whether it is such an expensive market that FIIs have to sell 2 trillion rupees worth of shares and still want to sell more is a moot question. Answer it. Think about whether it is such an expensive market. And think about whether what the FIIs own, the companies and businesses they are aggressively invested in, are actually so expensive. And you will find a very obvious answer that it is the liquidity which the counterparties to the FIIs are giving, which is the reason for the FII selling. If we don't give this liquidity, I doubt they would sell as aggressively. The fact that we are giving them so much liquidity, ease of selling and easy exits is definitely accelerating FII selling and keeping it constant, steady and almost endless. So if FIIs are selling so much, we, the domestic investors, are the real reason. How many of you think otherwise? What are your thoughts? Share them on the comment section. Let's keep this conversation going.